Okay, everybody, this is Brandon from Galaxy Doc Market. Today is July 25th, 2026, Saturday. It's about 9:25 a.m. Eastern Standard Time as I bring this analysis for the coming week. And as the title suggests, we're going to look at a historical analysis from July to August market trading action as we are mired in a very low volume, very choppy, sideways consolidation type of market. And we want to look at we're going to be looking at 2020 all the way to present and to kind of find out what the issues are and why it is so difficult to trade during these summer doldrum months, July to August, and we are waiting for volume to come back. And I've been saying that for the last couple of weeks, but I thought I'd take this moment to go over not only the technical analysis, and we're going into the meat of the earnings, and we'll cover some of the stocks that I think are very important, not necessarily to trade, but something to look at to gain insight into this chorus of people that are calling for a massive market crash and that the world is ending, and to find out if that's actually going to be true. So here we go. Here's the disclaimer. Pause it, read it. If you're not part of my community, please pause it and make sure you understand this disclaimer and move forward. And thank you so much for following me at x.com/galaxy.market. And also check us out, subscribe, like, and comment on YouTube. All right, so it's an age-old story here, right? We are still seeking volume normalization. What does that mean? Well, volume sucks. I mean, it's very, very below the average, the past 100 to 40 week moving averages, and this typically happens because the big boys are out still in the Hamptons, luxuriating and vacationing, and we are looking for them to start coming back to work. You can't say that for our senators who basically do very little work, right? Grift off the Americans and basically, take all these recesses, vacations on your dime. Think about that. But the hardworking people in the Wall Street should be coming back, and we are searching volume normalization. All right, so this is the look ahead for next week, and it's it's a very choppy market, isn't it? And we did have a bearish twist, and on Thursday, and then the volume pretty much disappeared again on Friday. Market closed, but it is something that we need to look at in terms of the gamma exposures, and so we have these gamma signatures right here. And so we're looking at these gammas, and of course we have some negative exposures right at the 7400 and the 7300, and really nothing has changed. Did we hit those levels on Friday or Thursday? No. We pretty much petered out right around that 7400, which leads me to believe these levels right here are going to be support. The MVC, most valuable contract, still resides at 7,600 as we look into July 31st, which is this coming Friday. Now, when we look at July 31st, as the market closed yesterday on Friday, we have a basically net drift of SPX, and we have a lot of puts being bought into the market close for this contract, July 31st. It doesn't really mean much of anything other than that people are doing the same things, right? It's Armageddon Friday. Oh my goodness, the market's going to crash on Monday, so we're going to load up on puts. And somehow, some way, Trump finds a news tweet or something about the Iran deal or whatever the case is to juice the market higher on Monday and Tuesdays. And I don't think that regime is really changing, partly because when you look at it, here's the blue line is basically the price where it closed at. And so as we close the market on Friday, when we look ahead to July 31st, this really is becoming support. We already hit these levels. Can it go back down there? Of course. Not anything is possible, but we're making a forecasting analysis Here's the thing though, MVC still sits at 76.10, 76.20, right up into these areas. And, could we have some external good news type of thing that turns out to be not later, but good news nonetheless on Monday? The market is looking for any reason to be euphoric. The problem is we haven't crashed. We haven't really sold off. We're just trading in a sideways range, which is very, very difficult for bears and bulls. And as I've always said, if you're going to participate in this market, you have to keep your position small. Don't have pie in the sky projections, or just stay in cash until the volume normalizes. And that's what we're talking about. But this is kind of what the gamma looks like. But without volume, none of these can really be trusted in any way, shape, or form. Partly because, let me open this up, partly because it's difficult for us to see a follow through without volume. All of these are probably, most likely, all of these positioning is probably the newly found gamma traders that are retail, right? PDT's gone. We got all the gamblers coming in, and so these things fluctuate. One thing about the gammas is that volume stabilizes and increases confidence of those gamma exposure levels. And without volume, it just becomes very difficult. So we got to use it, take it with a grain of salt, kind of have an idea where the market participants are positioned. But by no means I believe that these are the institutional dealers that are positioned, because they're in Hamptons. They're vacationing right now as we speak. All right, so let's move forward. And so one thing I want to talk about is that we had a previous Friday, and we had last 2 weeks ago, Friday closed, and then we just continue to have these declining volume. Thursday, we got our hopes up, still below average. And then here's Friday's volume lower. And, when the market closed, I think we were down here. And then somehow mysteriously this morning, the volume has come up, but it's still a declining volume. This is not a environment where you want to make big, huge bets. And on top of all that, we are range bound from, the 74, 76, 48, 75, all the way down into this 73, 73.20. And typically what happens is we get these Thursday to Friday sell-offs, and then we get these bounces coming on Mondays. And then, of course, Armageddon Thursday to Fridays again, and a choppy market action after that initial push higher. And do I think that may happen? Anything can happen, but I think that's been the norm over the last 6 weeks. Okay, we're going to do some volume and price action analysis of the SPX from 2020 to present, and then I will show you exactly why it's so difficult to trade in these months. And that's why I've always advised caution. If you're going to participate, our group has been nibbling here and there and just being cut up a little bit, basically taking one step forward and one step back. Very, very frustrating market. The best thing to do is still go fishing and stay in cash. And if you're going to participate again, use very small positions until the volume returns and we get some sort of direction in this market. Trading a sideways ranging market is for scalpers that tries to do $300 to $500 a day. If that's enough for you, then go knock yourself out. All right, so we are range bound. Here's the Fear and Greed Index last week on 24th, July 17th. Last week, we had a Fear and Greed Index of 37. Okay. All right. So we had the 37, but now we have 39. So fear is in the market. Everybody and their uncle is afraid that the market is going to crash. And, if it crashes, we'll know about it. But right now, we are range bound. Okay. So I want to analyze the SPX from April to August timeframe from 2020 to present. All right, so here is but it is the representation. It's just, sorry about that. It's a habit that I have. And we're going to extend all the way out into September 15th in this case. And what I wanted to show was that coming into from April to May, we generally have these. This is a daily chart. Going into June, we just have these giant volumes that basically make the market. And you can see that in 2020, right after the pandemic recovery, we basically had a significant volume rises and a recovery period. Okay, so as we entered into July, though, we started to have these subpar volumes heading into August, especially in normally what we want to see is that around like 26th, 24th, 25th, 26th, 27th of July, we want to see a volume recovery. And so what happened in these areas is that, and this is kind of analogous to where we are, we had a little bit of a sell-off on Thursday and Friday, and then moving higher as we go. And the narrative at that time was that the bears were just getting fried at that point because they were looking for the next shoe to drop. It just never came. But the volume really did not start increasing above this blue line, which is basically our 100-day moving average. And, it started to pick up in August, but really did not pick up until September. Now, we got into September. Remember, September through end of October is traditionally a very bearish month. And of course, here's another fake out sell-off that came. That's about 200 to 300 points in duration. And these are what people are trying to catch, obviously, but we ended up moving higher. Okay. The moral of the story here is the following, that the volume is lackluster in July, and it tends to pick up around 24th, 25th, and 27th. And then August, we start to get slow trickle of volume until we get to September. Let's look at 2021. And let's focus again these volumes heading in May, July, and June. I mean, not July, but June was pretty decent. Well, this year in 2021, this is 1 year post COVID, and the market was just rocking higher with a lot of volatility, all these sell-offs and everything. If you look into again, the 24th, 25th, 26th, 27th, we get these mini sell-offs, and then followed by that last week heading into August, we get these rallies, okay? And what I want you to appreciate is that technically in these months, through August to September, volume starts to normalize, and the middle period of July, it tends to be very, very choppy volume and price action. It's very important to understand that the recovery or a bounce at the end of July into August or a sell-off is very, very likely. Okay, let's look at the 23rd, 22nd, 2022, not 22nd, but 2022. Same situation that we're looking at is that big volumes heading into June, and then coming into July, we just have decline in these volumes, and then volume starts to pick up at post 24, 25, 26, 27 heading into August, and then volume slows down towards the end of August, and then September, we have volume rise. This is kind of where we are, and the market in this situation in the 2023, we had a market that was on its downward trajectory and then started to recover with a last bit of a drop off in 2023 before rallying into August, and before coming into September months, and then October, we had a pretty decent sized sell-off and corrective wave. So that's kind of what we're looking at. And then on the 2023, it's the same thing. We have these volumes that were above average volume spike into June, and then as we got into July, this is a little atypical, but as we got into July, we had a little spike in volume, but that was because that was the year in which I told everybody to just pack it up until August, and sure enough, we got our volume spike. That was atypical, obviously, and at that last week of July, led to a pretty decent sized sell-off over the next 5 days heading into August, and that's kind of where we are. And again, the middle of that August, we get that sell-off followed by recovery heading into the next month of August. But this is one year that was very, very atypical because we had a pretty decent sized volume, still below average, but we got these volume spikes from the 17th to the 24th heading into August. Okay. Now let's look at the 2024. 2024 was chopping near the all-time highs. Okay, and of course the volume, obviously you get these volume spikes from April to May and June. Again, 2024 we had these significant volume that rose up above the volume levels. Okay, in July heading into August. August actually was the decline in volume and then a spike. Here's the thing. Again, 24th, 25th, we had these short-term sell-offs heading into 24th. And then this is analogous to where we have and then a drop. Okay, in that situation. I don't anticipate a significant correction coming until probably end of October, the last 2 weeks of October. I think a sell-off is coming, a correction is coming. I just think that we're going to be range bound and we're just looking for any type of changes. And you know about my theories on the monetary system change. And so therefore, Trump needs to hyperinflate this stock market. And he's shown pretty much that the markets are manipulated and he can pretty much move the markets at will by his tweets or whatever. And that's what I think we're looking at. But coming into that end of the August into September is basically going to be a pretty bearish month. But August tends to be, at least for the first half, a bullish month. Okay, but that volume decline is normal, except this was a bad example for that. Okay, so now as we head into 2025, you're going to see, again, you see these preponderances of volume going into June. And as we head into July, we just kind of peter out until the last week, okay, into this area. So this is kind of analogous to where we are. And this is why I think we're going to see a little bit of a bounce into next week, even though I'm pretty neutral for the following week. Okay, it's something that we need to pay attention to. And of course, we basically rallied all the way in 2025 to September and just continue to move. And especially after after the President Trump has gone into the office and, the market started rampaging higher. All right, so we'll look into what's happening currently. Now, obviously, we're not looking into August or September because we just don't have it, but we do cut off. This is as of Friday. And as you can see, pretty decent volumes heading into May. I mean, we're spiking a lot of these days and into June, big volume. We are chopping sideways, as you can see. We're near the top. And then the volume just disappeared after 4th of July. And then we're trying to pick back up. And then there's this hope of a volume increase. And then we just cannot break above these levels. And low volume markets are very, very unpredictable. And especially if you trade based on pivots or gammas or whatever the case is, it makes it very difficult to get a good range. This is why I always say, until the volume returns, stay in cash, go fishing. Or if you must trade with smaller positions because more than likely it's going to be one step forward, one step back until volume returns in the middle of August. Now, what we're seeing is that this is Thursday and then this was last Friday, yesterday's volume. We just have a very subpar volume situation. And of course, a lot of people see this 120-point drop on Thursday and think the market is going to absolutely just crater. And, we've seen this before, right? Armageddon Friday, and then followed by a Monday bounce back to this range-bound hell that we're in. Okay? And so moral of the story is that this is a pretty typical thing. July is probably the worst month to trade, but there were a few years where at the end of July was very lucrative on the downside. And so I think people are looking into that. I just don't see the range. Look at these candle sizes. They're very, very small. They're not these big, huge candles that we're used to. And not only that, we're range bound. We're not having any type of direction, either bullish or bearish. And so we're seeking direction at this point. Patience is advised. Okay. All right. We are going to be doing some macro analysis. We'll just keep this really short because I have so much to cover, folks. Okay, and we're just the moral of the story is that July volume reduction is normal. With the exception of a couple of years, really there's been no volume spikes, and that's what we're following. Now, on the macro side is that, look, the dollar rising is not a bullish thing, folks. 10-year yield, we pulled off the 47, but we hit that. Now we're at 46.75. These are danger zones for anybody holding, 10-year U.S. Treasuries, 30-year U.S. Treasuries. Who holds those? Those are the banks. And so banking stress is happening. But in the context of me saying that there is a new monetary system that is being developed and implemented as we speak, and this is why there's so many distractions away from the fractional reserve banking system. Okay. And this is where the Clarity Act is important. The rest of the world has basically implemented rules and regulations regarding cryptos, and the rest of the world is moving away from the fractional reserve banking system. We're the only ones with our no good senators who are basically, I would say, they're grifters of our society. Okay, there's no term limits. Half of them are maybe dead. I'm not sure. Okay, we don't know where Maxine Water is. Mitch the bitch McConnell, where the hell is he? Okay, and the thing is that there has to be some form of term limits. Okay, I'm just gonna say that. It doesn't matter. My channel is small. My group is small. So if they want to demonetize me or not demonetize, but just shadow ban me, because it is what it is. Okay, but I have to say what needs to be said. Okay. So we have these problems that are coming up, and you just want to see the things that are being implemented right now behind your back. Do look at what they do, not what they say. Okay, and don't trust your politicians, both Republicans or Democrats. Okay, trust in God. Okay, there I said it. A little plug for Jesus. All right, so basically what we've got is we have oil coming up to 93 based on the tensions in Iran, all a distraction, folks. All right, if we're truly going to crash, okay, yes, we are out of this consolidation on the VIX right here. This is basically VIX in our daily chart. And yeah, we're at 1858. Yeah, big whoop. We climbed up a little bit from 17, but we've seen these before, just popping up and then just going back into this range. Okay, eventually that will break, and eventually it will go, but I do not believe that's going to happen until we get hyperinflation first in the asset prices. Okay, gold and silver. Okay, nobody wants them right now. Yet I believe that the bottom is in. And so basically, if we can just break above on gold on this level, 41.95, we're off to the races. If we can just get above this 64 level, we're off to the races. The bottom is in, folks. We're making lower highs at this point. Okay. That's about it in terms of macro. Is it bearish? Well, it's not bearish, but it's not good. I mean, it's not something that you would see in a very, very strong market. What I will say is that the monetary system change is coming, whether you like it or not, and the digital currencies are here to stay. And hopefully, these things happens faster than normal. What's happening in the United States, these people are paid shills that are in Senate, completely compromised, completely self-unaware, and narcissistic. Get rid of them. All right. We need term limits, and we need the right people in the office. All right. Just makes me sick, folks. Just sick. All right. Okay, so we have a big week of earnings coming up this week, and so we're going to be covering that in a short while. But I do want to talk about some of the things that are coming up that you might want to pay attention to that we're definitely looking at. I think UPS is going to be a big deal in terms of giving us direction of the how the industries and economy is. Increased shipping means better economic conditions, and I just not sure where we're headed right now. Okay. Trump does say that the market is doing good, the economy is doing good, but people are still suffering. But this is what happens towards the end of a monetary system and a new regime comes in. Okay, so pay attention to UPS and, of course, the very big hitters. Okay, I would pay attention to ADP and all of the healthcare stocks. Humana reports on Wednesday before market opens, and then Cigna. I would pay attention to them. The big hitters are going to be Microsoft, Meta, ARM, and Qualcomm, Lam Research. Pay attention to this Chipotle. This is a position that we have long term. It's a recovery play. And there's something that may be said. This is something a dark horse for this week. Okay. Of course, Apple and Amazon. We're going to cover some of these stocks, and as we go. But this is what it is. This is what we have, and this is something that we want to look at. The moral of the story is that we are looking for volume normalization for the end of the summer trading, which kind of sucks, right? I mean, it is what it is. And those of you that are just getting frustrated, we're all there. I mean, it is something that you have to live through. And I've been living through 38 years of this crap. And it's the same thing. No matter what changes, they remain the same. Okay. Of course, hey, XRP is going to be the rails in which the new digital currency system will run on. It's on sale right now. Don't be these guys. I put this in every time. Okay, so let's look at really quick where we are in the market. Okay, McClellan Summation Index. I'm short-term neutral to bearish, and but I do believe Monday and Tuesday we're going to get a rally. Okay, we're kind of flattening out right here. I think we drop a little bit heading into Friday, although the MVC, if you can trust it without volume, for the gamma analysis is showing 7,600 to 7,620 on the SPX. Add 40 points to that, you get your ES levels. Okay, so that's what we have. And then let's move on into SPY. Look, folks, yeah, we're stalling out. Can this lead to a breakdown? Sure, we can. Anything's possible, but this sure looks like a bull flag to me. Yes, all of these are negative. RSI has a negative divergence. We have MACD that's about to cross over. So I am bearish. I am bearish heading into this end of the week. However, I do believe that Monday and Tuesday we may get a rally a little bit. Again, we're chopping in a range. Nothing's really changed on this weekly chart. Okay. SPY on the daily, look what's happened here. We're finding support right at these pivot levels, right? And is this a double top? I don't know. You can call it whatever you want. All I'm saying is that we are trapped in a range. Yes, we had a little blip here, but that was the washout that caused this. Okay, and so does it look bullish? No, it doesn't look bullish. Does it look bearish? Maybe a little bit. Or does it look neutral? To me, it's neutral. There's nothing really going on. Yes, we have negative divergences everywhere. We have the MACD that crossed over here on the daily. Let's look at it. Okay, we have CCI that has just completely dropped off the face of this earth, and then we really haven't dropped that much. Some are saying that this looks like a head and shoulders. Here's a left shoulder, head, and right shoulders, and then we're just retesting that right side of the shoulder, except the problem is we breached that. So yeah, we're chopping sideways. Okay, it's got to make a decision one way or the other. I just don't think that the market's going to crash until late October. I just that's what I'm waiting on, and I'm going to stick to it. PPO-ADX, okay, is forming this type of a situation, right? Where if you start doing this, well, that's a crush. And so we're just waiting, okay? We're just, there's nothing happening. This market is just testing everybody's patience, but we got to be patient, okay? There's nothing really bearish about this. We're about above the rising trend line. Sorry about that. And we have this sideways consolidation on the monthly. I mean, it's just not really anything that I'm concerned about. This actually is bullish, folks. All right. So, um, silver, let's see if we can find support right at the bottom end of this Bollinger Band. Okay. Get them while nobody wants them. Gold, same thing. We're below this trend line, but failed right off that ADMA. So nobody wants them. This is the time to get them. Let's look at Apple because they are reporting earnings today. I mean, not today, but this week. Sorry about that. I don't know. It's just been talking a lot. That's what happens. All right. So we have negative divergences on Apple. We're near the top. Okay. Volume is lackluster. We did have this gigantic volume, which led to the rally that's been happening. Apple is the market barometer, folks. Okay. And they report earnings, and it is very, very earnings dependent. And let's see what Apple has in store for us. To me, it's 50-50 here. It could basically be this is all she wrote and she comes down. But if Apple can push higher, it just looks like everything is pushing higher except CCI is telling us something, right? There's negative divergences in the CCI. Yeah, yeah. I'm neutral on this one, but if somebody put a gun to my head, I think that the earnings are going to disappoint and then we're going to sell off here. But the crush indicator, PPO-ADX crush indicator, brain fog, folks, it was bullish, but we're now nearing the end of that range. Okay, so basically we have accumulation, yes, definitely being accumulated, and then ATRs near the top end. We have a little breakdown here. So, these accumulations can lead to further price gains, or it could mean the mark of a top. I'm just not very sure on Apple. If pressed, if the premiums look good, we might take a shot on the short side on here. Meta is, however, I am bearish on. Okay, Meta is forming negative divergences. It's failed multiple times. It's in a downtrend slope, and we have all these lesser ADMAs and 5 SMAs and 50 SMAs are all pointing down. I think this has legs all the way down to 473. We are bearish. Look, when you have these MACD histograms that look like this, it's just basically building energy to move lower, and we have a death cross almost forming here. Okay, so let's look at where we are in terms of the CCI. Kind of can't break above into this positive range, and we're turning back down. Stochastics, I don't know. It looks pretty flat to me. So everything's flat. PPO-ADX is sort of bearish. Accumulation distribution definitely being distributed. Okay. UPS, I'm very big on this one. UPS is going to tell you where the market is headed over the next few weeks and where the economy is. And what I'm saying at the moment is that we have negative divergences in the RSI. We poked above the Bollinger Band, and then we're just kind of stalling out. Can we pop to this level and then drop? Yes. So I think patience is warranted, but I am bearish on UPS right now. Okay. And then Amazon. Well, Amazon's in trouble. I mean, when you look at these stocks, I mean, we have negative divergences everywhere in the RSI. Yes, we're near the all-time highs, but we basically stalled out, and we're now forming a downward trend. Okay, can it come down here and bounce? Sure, it can. It's just something that I believe that if Amazon cannot hold this 50-day moving average, we're going lower. Everything is divergent. Okay, so basically, I'm bearish on Amazon, but does that mean you go and front run earnings? I'm not sure yet. We might if the premiums are looking good, but we need volume in this market, folks. Microsoft, bearish on Microsoft, folks. We've been having this positive divergences all the way up, and now I think that's just playing out because on this leg up, we're now forming negative divergence. Okay, so. For me, if they can't hold this downward trend line right here, then we're going right into that bottom end of that Bollinger Band. If the earnings suck, it's going to go to 320 level. Okay, so that's kind of it for now for us, okay? And I think What we're looking for is volume normalization. I think Monday and Tuesday, we're probably going to have a rally back into that 55, 70, 55, 50, 75, 70, 75, 50. I don't know why I keep saying 55, 50 level on Monday and Tuesday. Okay. And then we're going to have some bearish actions to bring the markets within that trading range. This is a big earnings week. Markets are range bound, and so I'm not expecting much. Stocks are near all-time highs, and as you saw what happened to Google, you saw what happened to Tesla last week. We talked about that. Okay, and markets lack range and volume. Okay, that's it. Okay, I'm bitching about range and volume. That's what I'm talking about. Okay, can't do much. We gotta basically either stay put in cash until the volume returns, or we break out of this sideways consolidation. Trading volume has yet to pick up, so that's our warning. Okay, so watch for continued choppy, manipulated market. Trade the markets that it's given to you, not the one you want. But sometimes the best trade is the ones we don't make, right? Our group found out just how frustrating it is to take one step back and one step forward. It doesn't really matter how you do it. Is that we need volume. Okay, we need volume. Big earnings week. Silver and gold, accumulate cryptos. Okay, buy any pullbacks. Don't fight the bull. Okay, we're still in a bullish uptrend. Keep positions small or stay in cash, neutral. Stay neutral this week. Okay, and if I think the best, honestly, the best opportunities are going to come from earnings. We're watching UPS, Meta, Amazon, and Microsoft. I'm not so sure on Apple. Okay, I think Apple might do one of those earnings where it does nothing. Okay, but if you had to play earnings this week, I would look to UPS, Meta, Amazon, and Microsoft earnings. Okay, those are the big ones and has the tendency and the capability to move. Okay, so that's it for now. I presented to you the last 6 years worth of July to August trading volume analysis and how that works. Okay, and so rule of thumb is looking for volume to increase coming in August. Okay, and this little blip of a sell-off from Thursday to Friday, it's been going on for a while, folks. Okay, and I believe unless something drastic happens, that we're just gonna chop in a range. We'll just bounce from this lower level, 74.40 level, probably up into 75.50, 75.70, maybe even 7600. That's what the MVC is for end of this Friday, 7:31. Okay. Anyways, follow me at Galaxy.Market. Like us, share us, and above all, comment good and bad on YouTube and subscribe. If you want to work with me, email me at coachbrandon@protonmail.com. If you want to join my community, okay, I'm entry level, but it's got a lot of features. You get my videos early. You get intraday commentaries, watch lists, chart analysis, anything that you want, you have. For most experienced traders, that's all you need. $49 a month. Click in the link in the description or profile below. Listen, guys, until the volume returns, stay in cash, keep your position small, okay? Go do something fun, ride out this July, okay? Don't let these doomers tell you that the market's going to crash. They've been crying about markets crashing on Monday and Tuesday for the last 4 months, okay? And we're just range bound. There's no indication that will happen. I do believe a crash is coming in late October, but we'll see about that. I may change my mind. I have the right to. Okay. Anyways, good luck out there. Be careful out there. Be patient. Patience and persistence. Okay, let's get some alpha if we can find it. Bye-bye.